Buddy Brian here. It is Wednesday, the 15th of March, 2017, and we had a nice day in the S&P 500 and the rest of the equities markets today, as the primary trend is still higher. And as I always say, the benefit of the doubt goes to the buyers. During these sideways consolidations, we look for a higher likelihood that the level of resistance will be broken, and that's in fact what we saw today. So going forward from here, it looks like the S&P 500 should be able to continue to rally and should be able to see new all-time highs. Here is what I'm thinking. We now will look for that 237.75 to 238 level to act as support on any pullbacks from here. And the Nasdaq also out to new all-time highs here as it broke its consolidation. And again, when we have a rising 5-day moving average, it's more likely that it will continue in the direction of the primary trend. And same is true with the 10, 20, and 50-day moving average. When they're rising, we're considered innocent until proven guilty, and the corrections occur through time unless we break down below a important level of support and show a pattern of lower highs and lower lows. That has not happened. This is what we had sketched out as a possibility, not a call. It was more likely, as I said, to be able to continue to move on the upside. The Russell 2000 has finally made some nice progress here today as well. This market is back up above the well, it's been holding above the volume weighted average price since the election, and the volume weighted average price year to date, you can see we're back above that. That is, this level has been offering a little bit of resistance recently, and it's nice that we're back above that. We're back above the 5-day moving average, and right now asking ourselves, where has it come from? Well, it's just broken a little resistance after a move from 134.5, and where does it have the potential to go before it's likely encounters supply? I think that the best scenario from here for the Russell 2000 would be, maybe rally up a little bit further, pull back, and then be able to show a pattern of higher highs and higher lows above that rising 5-day moving average. So a lot has improved for the Russell 2000. We're back above the 50-day moving average. We're back above that volume weighted average price since the election. We continue to be, rather, and with it at this prior band of support, which has been, which we also see is the 20-day moving average. It seems most likely, I wouldn't short it here, but it seems most likely that it would pull back a little bit and then be able to continue to move higher. The semiconductors, guess what? Another new all-time high. If you're shorting because it's up too much, you're wrong once again, and you're getting exactly what you deserve, really, for shorting a market in an uptrend. This market continues to stair-step higher, prior levels of resistance tested and held as support this week with a rising 5-day moving average. You expect to see continued higher highs and higher lows. Our first level that we want to see hold on any pullbacks would be about 77.5 if it gets down there. The biotechs, this group is making some headway, and I think it's likely to be able to break this high that we have seen earlier this year. And as I said in the Yahoo post, I think that intermediate term we're probably headed for 340.45, and it looks to me innocent till proven guilty above a rising 5-day moving average. If we see some pullback in here, I wouldn't panic. I would look for this little resistance of the last week to hold as support, and then be looking to be a buyer on strength with a stop, continue to raise it up underneath the successive higher lows.